Hello there, traders. Welcome to today's live stream. My name is John, Senior Market Analyst here at Blueberry Markets. I'm going to be taking you through some charts of interest. I'm actually going to take you through the currency strength meter. Obviously, not a lot of data coming up this week. There obviously is some important data, but obviously the market's just going to be digesting what happened last week and the aggressive volatility that we've been seeing around and about. So I'm going to be focusing this stream just purely on currency strength and weakness. We're going to have a little look at some ideas for the week ahead. I'm also going to just show you a little bit of data behind the scenes that I'll look at. And yeah, we'll go over some company trader report data, some seasonal data, all that good stuff as well. So welcome, everybody. I can see we've got a couple of people in already. So Harmy, welcome. Ratish, welcome. Emmanuel as well. Yeah, Ratish has summed this up perfectly. What a roller coaster. What a roller coaster the market has been over the past week. I hope everybody stayed safe in that period. I hope we didn't see many sort of capitulations of accounts and things like that. You know, that's not something that I like to see. Obviously, when I'm talking about markets and things like that, I like to be very methodical. So I'm hoping that passes on to you guys, and I'm hoping that has some kind of impact. So I hope you weren't caught up in any of the wrong side of the market, put it that way. We've been talking a lot about safe havens over the past few weeks. We've been talking about a lot of Swiss buying, yen buying, things like that. So hopefully you've been on the right side of the market with that. So yeah. Hi to you as well, 𝖢𝖣𝖣yi. Hope you are well. How you did so well on dollar yen, but forgot to set a stop loss on gold and lost my account. Eesh. Yeah, that's not good, is it? But hey, look, we all make mistakes, right? Stop losses are paramount. Now, you might think, well, every time I put a stop loss in, it hits my stop loss and I lose. That's a good thing, right? We've got to stop thinking that being stopped out on a trade is a bad thing, right? The stop loss gets us out of a position when we no longer want to be in it. Okay, when we shouldn't be in it, when everything is turned against us. Okay, so yeah, still learning, wasn't much. That's good. That's good. But yeah, that's a lesson learned, you know, for the future. Definitely. Ratish closed all my trades before NFP and was enjoying the fun. Yeah, yeah. I actually had a good day last Friday. You know, I've been very much talking about shorting buying Swiss franc against weaker currencies over the past few weeks. So I was short Kiwi Swiss last week. If I just go on to Kiwi Swiss and just go up to the weekly chart, you know, been basically short in this since we've had the break of 54s. So the past couple of weeks have been pretty nice. You know, market has been dropping to the downside, which is something that we've been looking to take advantage of. Starting to see some slowdowns now with price across the board. You know, that's largely down to the fact that the volatility is starting to come back a little bit. Okay, Monday was a hell of a ride. You know, if we look at the volatility index and we look at the move that we had when we opened on Monday, you know, that was a 183% rise in volatility. Okay, and that's why the market, you've been seeing the dumping of the stocks. You've been seeing safe haven buys with the yen, and there's obviously deeper stuff going on behind the scenes as well. But yeah, we had a 183% rise in the volatility index. Now, to put that into a little bit of context, we haven't seen a rally like that since COVID of 2020. So very significant volatility coming within the markets. That's why everybody has been thrown around, really, because people are trying to work out where this volatility is coming from. And it's been largely down to the NFP report. So let's touch upon it, because I don't want to go too much over this today, because I wanted to go over the currency strength meter, because I didn't get a chance to do the currency strength and weakness video yesterday, obviously because of all the market volatility. So I covered that instead in videos and on reports and stuff. So what were we looking at last week? Well, it was a hell of a week in markets. You know, there was so much red folder data last week that whenever I see a news calendar like that, I automatically go into the mode of, we've got potential safe haven risk. We've got risk. We've got volatility within the markets. Okay. And that's exactly what we had in the end. Now, some pieces of data were important. Some pieces were not that important. Some of the biggest pieces of data was obviously the BOJ hiking interest rates to 0.25%. Bank of Japan now probably in their most hawkish that I've ever seen. So that's quite a turnaround at that point. And there could be a little bit of risk, obviously, around that, because this kind of led to the unwinding of what we know as the carry trade. And essentially, what the carry trade is where you would, or how it works in sort of, we know it as kind of the swaps difference, but in sort of hedge fund trading and things like that, what they'll go and do is borrow a ton of Japanese yen, because it's a currency that has a low interest rate, and they will put it into a currency that has a higher interest rate. And when I mean put in, they will go and purchase currencies that has a higher interest rate. So like the US dollar, and we can see that down here. If we just come to the bottom here, the New Zealand dollar and the US dollar have higher interest rates than the Japanese yen. So what you see is hedge funds will go and leverage up essentially on a currency that has a low interest rate, and they'll go and purchase a currency that has a high interest rate. That's what the carry trade is, right? And you're seeing a lot of headlines saying the unwinding of the carry trade. And that's basically because the Bank of Japan have hiked interest rates. So let's say you went and borrowed money or leveraged money from the Bank of Japan, let's say, the payments you're going to have to make will be higher. Okay, they will be higher now. So that's something to take into consideration with regards to the carry trade. Now, looking across the board, what else did we have? Well, we had the FOMC Fed funds rate decision as well, which they held at 5.5%, and it was very likely that they would hold at 5.5%. So there wasn't really much going on in terms of that. What did really change the momentum within the market was this jobs data. Okay, this jobs data, and it's something that I've been talking about for a good while now, is the fact that the unemployment rate rose to 4.3%. Okay, now the unemployment rate rising to 4.3%. Let's take that into a little bit of context. What does that mean? If I just kind of open this chart up a little bit, typically, if we just go to kind of max, we can sit around about sort of 4.7s, right, and still be fairly healthy, right? So if we look at sort of the last time something happened in terms of, this is 2008, right? We all know what happened in 2008. There was a big economic crash, and the unemployment rate shot up to record levels at the time. What we're seeing in the trend of the unemployment rate now is that it's starting to trend higher. I haven't got the 2007 data here. Let me just see if it'll go back a little further. 2006 kind of goes back to 2004. But you can see there's a similar pattern here. And what I said was the Fed will not want to see this anywhere near 5%. If they see this near 5%, we're potentially in recessionary levels, right? Because you can see unemployment declines, everything's good, everyone's happy, everyone's all gravy, and then that unemployment rate starts to climb. And in 2008, obviously, we had the economic crash, and the unemployment rate went extremely high. We've then had a very slow process of the unemployment rate declining. So we've had a very healthy jobs economy. The mandate by the Federal Reserve and the central bank has been pretty good. You know, one of their mandates is full employment. And we see that move. Then obviously COVID happened, and the shock of COVID was just something that was unprecedented. We've never really seen anything like that before. So we were back on track again, and then we kind of came back to levels that we were used to. So this was just kind of an outlier. That 2020 to 2022 area was just kind of an outlier. But now we're seeing unemployment tick up again. Why? Well, the interest rate's higher. The interest rate at the moment is 5.5%. And that impacts everything, right? It impacts mortgages. It impacts businesses that are looking to borrow money, to spend money, to grow. Okay, and that is going to impact a lot of markets involved with the US economy, obviously. So what we haven't seen is them hold interest rates for as long as they have. Okay, at higher rates. Now, what that means is we're kind of in this territory we haven't really been in before, and we're starting to see the impacts, right? CPI, Consumer Price Index, is coming down. We're sitting around about 3% at the moment, still well above targets. The target rate on CPI is around about 2%. So that is the inflation rate. Okay, some things that came lower, core. Okay, so core CPI is Consumer Price Index. It just takes out the more volatile products, so like energy and food prices, because they can fluctuate quite aggressively. So they take that out. Now, this is the one that you should focus on the most because it gives you a more understanding of what's actually happening with regards to consumer spending. Okay, now that came down to, that was 0.8% in the last reading, essentially, which was a big jump lower. And that's again giving us a little bit of a move. What else have we had? Well, we've had manufacturing PMIs. Now, I would have took this one with a pinch of salt, because manufacturing PMI and services PMI basically tells us how the economy is performing in sort of two sides. You've got the manufacturing side and you've got the services side. Now, the US are very heavy service based. It's very much like the UK, very heavy service based. And the service based actually upticked. So that's kind of brought a little bit of calm in the markets as well. But manufacturing PMI was very low, came in as a little bit of a shocker to the downside. Now, the labor market. The unemployment rate climbing. We saw really poor jobs growth in July. So there has been this big turning point, and that's what's caused the market to really panic. There's a thing called the SARM rule, right? The SARM rule. And this is a lady who developed this, and she actually used to work at the Federal Reserve. And the way this basically works is, it uses the unemployment rate and has a 3-month moving average. Okay, 3-month moving average, and what it looks at is a 0.5% increase above the prior year's low. And if you get a 0.5% increase in the prior year's low, then a lot of the times that can lead to a recession. And it's been very accurate at calling recessions. And the alarm bells were going off because that occurred, right? So, of course, everyone panicked. Everyone moved to fear. Everybody was like, no, economy is crashing, X, Y, and Z. Now, do I feel like that is the case? I don't. I don't think the economy is... Do I think there's a recession coming? Probably. When can you call that recession? You can't. I think it's silly to try and call a top in a market. I don't think that's practical. I'd rather wait for the top to come and then deal with what happens. But essentially, the key rate for me is around 5%. That's where it all really kicked off in 2008. That's when it kind of really kicked off with COVID. That 5% mark. Now, technically, anything below 5% is actually considered fairly healthy in modern economics. But that is an area I think we would look for a sort of area of interest, right? If we're below that, I don't think the Fed want us to see us breach that, put it that way, in my opinion. Obviously, don't take my opinion as gospel. Do some research on it. But yeah, this was May 2008, where we had 5.8% above that 5% mark in June. So yeah, that was when it all really started to kick off in 2008. And I don't think they want to see a similar situation like that. So what are they going to try and do? They're going to cut interest rates. Now, the market is now panicking because of that jump Okay, and a 0.2 jump in the unemployment rate is technically quite big. So they're now panicking, and they're trying to basically price in a potential 50 basis points cut now. If we go check out the CME Fed Watch tool and put this into context, last week this wasn't even on the table, right? And if we go take a look at the September meeting, right, there's 100% chance of a cut, which is something that we talked about previously, which we expected, right? But it was the chance of a 25 basis point cut was at 97.5%, I think it was, something like that. That is a 7, by the way. It's a dodgy 7. That's changed drastically. And I think this, again, is where it's adding fuel to that fire of panic in the markets at the moment. So the market is now pricing in the chance of a 50 basis points cut, right? Now, when I say 50 basis points, it just means a 0.5%. Okay. And when I say 25 basis points, it means 0.25 or 0.25%. Okay. And that wasn't necessarily being priced in before. If we kind of have a little look at the bottom screen here, right? Let's just zoom in down here. And this is the CME Fed Watch tool. This is free. You can go and Google this and grab this for yourself. So you can do this. Have a look at it. This is an interesting box down here, right? This box down here. And the reason being is because it gives us a 1-day outlook, 1 week, and 1 month, right? And this is showing you how much it's changed. Okay, so last month, there was only a 5.5% chance that we were going to get a 50 basis points cut. A week ago, it was only 13.2%. And the past day, it's gone to an 85% of a 50 basis point. So there's been a huge shift in market sentiment, right? And I don't think the unemployment rate going higher is the only thing that's compounding this weakness. I think obviously the Bank of Japan turning hawkish for the first time in a very long time is also having an impact on that. Maybe those that there is one theory I was speaking to Jordan about this morning was that the people that have, or the hedge funds that have taken loans from Japan, they pull it all into stock, right, into the American stock market. That's why we're seeing them take money out of that to pay back some of these loans that they've had, because the interest has increased, essentially. So that's something to be aware of. There's just a lot of data points coming in at the market, and this is why it's important to try and learn this kind of stuff, because in my opinion, the market is driven by data. It's driven by these things, and it's not driven by price action. It's not necessarily driven by somebody, aggressively trading. Those aggressive moves are going to come off the back of monetary policy and things like that. So definitely something to consider going forward. But anyway, this week, what are we going to focus on this week? Because, typically when the market goes into these type of risk modes, it can be hard to trade, right? Because you wonder into yourselves, is this the right time to buy the markets, or is this something deeper? How do I position myself in and around these things? And really, what has changed? Monetary policy has changed in the US, but did the Fed say that they were going to cut interest rates last meeting? No. Did they pave the way for a cut in September? Yes. Did they say it was going to be by 50 basis points? Absolutely not, right? So the market's been a little bit irrational at the moment in terms of, if we were to see the Fed not cut by 50 basis points in September, that could disappoint a lot of markets, right? That could disappoint some of these positions, and we may see some short-term reversals to the price action that you're seeing at the moment. Do I think that this sentiment at the moment is going to stay? I do, a little bit. I don't think that we're going to see aggressiveness like we've seen. I might be wrong, but I don't see that happening right now, especially because when we go take a look at the volatility index right now, it's coming back. It's on its way to the downside, which is great. Okay, that's what we want to see for normal markets, right? And it did spike up to those COVID levels, obviously, which was super interesting. Do I think that we were going to do that? Absolutely not. I was talking a lot about the April move that we had and was relating it to the April move. I should have been relating it to the move that we had in COVID. Now, obviously, COVID was very different. It's a very different situation. It's unprecedented, like I've said in the past. So, really speaking, we should be looking at an area now where, you know, we're in these kind of areas we've been before in very similar situations. You know, 2015, most notably, was an area where we spiked up into the 40s, as well as like what we did with the VIX recently, 2018 and things like that. And then the market has continued on. If I go to obviously 2008, that was a big economic crash and everything kind of crumbled at that point. So I don't think we're in this territory though. Put it that way. Don't think we're in that territory. Hi, Bruce. Sorry, I've missed some messages, guys. Ty, it's crazy to see how a single number result can result in so much money management. Yeah, definitely. I think obviously there was other things on the table. Like I said, with regards to the Bank of Japan, completely kind of switching tactic, getting aggressive, which we don't typically see from them. So yeah, that's definitely something that's interesting. Bongo's at work, no worries, we'll watch it later. Thank you for joining in the meantime, Bongo. I hope work's okay. Hi, Rago. But yeah, so the market's mad, right? You know, and the market can be irrational at times, but if we let's go take a breather, let's go take a step back, let's have a little look at things. Let's go to the monthly chart on the S&P 500, and everything starts to look a little bit better, right? When you look at this monthly chart and some of these areas that we've spoken about in the past where the VIX has rallied aggressively, this was COVID. Okay, that was the COVID move in here. This was the 2015 move that we were talking about. Obviously, we had the 2008 over there, but this chart's not showing me that. And then this was the most recent kind of drop where we had the whole situation with the idea that the Fed were going to hike interest rates. So we had that move to the downside. So technically, we're still bullish, right? What here suggests that we're going to break and move into a bear market? There's nothing to suggest that that's going to happen right now. I think it's I don't think we're there yet, put it that way. Like I said, for me, the unemployment rate 5%, I'll be on the bus. I'll be with you all with regards to some serious downside movement. Now, we also have to put into context, it is only the 6th of August, and we've had a 9.7, or is that 8.5% move already. We're only 6 days into the month, you know. That's quite scary. That is quite scary. But that's because of that volatility rise. Now, we're going to take a look at sort of the daily chart. One thing I like to look at a lot is the 200 moving average. When you look at stock markets anyway, the 200-day moving average. And we clipped it. We did clip it. This was something that I didn't expect to happen, right? And we did clip that 200 moving average. Now, from a technical perspective, I feel like that would be good to watch if you did want to be short this market, because in history, when we do get those breaks below the 200, we can turn into a bit of a bear market. The only one that really didn't start to see that effect was here back in 2023, between October and November of 2023. We didn't see that sort of thing there. But typically when we see a break of that 200, the market can rip a little lower. Okay, so that's something I'm definitely keeping an eye on right now. Do I think that is going to breach and price is going to continue lower? I don't, because I think now when you look at the discounting across markets, so let's go take a look at Nvidia, for instance, on the Nasdaq. This has been discounted quite aggressively now, right? If you let's say you wanted to be an investor into Nvidia, and you were saying to yourself, well, where would I want to buy Nvidia? I would want to be buying down at these kind of lows, right? I wouldn't want to be buying at the highs. So I think my mouse has just died. Which is great. Come on. Do they make mouses these days with rechargeable batteries? Because this one is just horrendous for me. So sorry, guys. I'll have to just keep talking for a bit. Vincent, good afternoon. I hope you're doing well. I hope my birthday went. Yeah, I had a really good birthday. Thank you, Vincent. Appreciate that. Yeah, just had a nice one with the family. And my mouse has literally died. great. So I'm just gonna have to talk your ears off for a little bit. But yeah, essentially, you know, Nvidia's at discounted prices at the moment. So, you know, for me right now, we're in a very, very interesting place in terms of price action. We're very discounted, I would say. And, you know, this is why I don't think we're seeing aggressive moves in the likes of gold, for instance. You know, if we were really in a very strong economic crash, then gold can typically, you know, the market would want to go move into safe havens, right? Now, we are seeing the safe haven play. We are seeing it with the, sorry guys, I'm trying to get this mouse to work. I don't know if I have any more batteries with me. We are seeing that obviously across the board in terms of yen and Swiss. Sorry, my mind's going off trying to get this mouse to work. With yen and Swiss, but obviously then we haven't really seen any kind of follow throughs on other safe haven assets, that being like gold and things like that. So yeah, it's definitely interesting at the moment in terms of what's going on. Now I can see that the pre-market we're seeing a little bit of upside to Nvidia as well. So this is going to be something that's very interesting. I don't have any batteries and anything else that I can take out and use right now, which is also very frustrating. So I don't know how I'm going to show you anything else right now. I might have to go and find some batteries somewhere. Pretty sure I had some before, but I'll have to go on Amazon and get some. But this is fun, right? I was going to show you all these currency strength meter ideas today that I had. And now my mouse is gone. I should just get a wired mouse really, shouldn't I? All this tech with batteries. Come on, just give me half hour. Give me half hour. That's all I'm asking for. Dead. It's dead. All right, guys. I might have to just leave you all for a minute, just chilling, because I don't think I have any batteries. I'm just looking up on my shelf to see if I've got anything. Probably not. So that's fun. I'm gonna have to leave you. Take the battery from the mouse and press the battery. It should work. What does that mean? What do you mean by press the battery? What do you mean like that? I've been turning it off and on again for the past 15 minutes. This is very... I don't like using wired things. This is my problem. So I've got like a wireless keyboard, wireless everything. But you know what? Sometimes a good old-fashioned wire. Come on. If not, I might just have to leave you for a little bit. I need to go and find... Come on, give me something. No juice right now. No juice. What I might have to do is... 1 second. Let me see if I've got something. Now you're just going to have to just bear with me, guys. Let me see if I've got any. Aha! I have batteries. There we go. Right. We're going to come back to life now. We're going to come back to life. We're going to be able to draw things on a chart for you. And then we're going to go through some currency pairs of interest. We're going to go through gold. Yes, we have life. We can draw smiley faces again. We're back. There we go. I had my last pair of batteries in this packet, so I should be good now for another 3 weeks. Right. Let's go have a little look at the currency strength meter then. Obviously, this is something I do base a lot of my analysis on. And the reason why I base it a lot on this is because I got the data to back it up. So this is what I'm looking at this week in terms of currency strength and weakness. Let me just put this out to sort of 90%. We can have a little look. So the change on the week, there has been quite a decent amount of change. Obviously, the yen's still the strongest currency in that reversal zone. I don't see the reversal coming just yet. But what it means is that that currency is extremely strong and that it could be coming to an end soon. The Swiss franc also a very strong currency as well. So these are currencies that I like the idea of being long on. Changing the euro was a little bit surprising to me. +3 that I've got it marked down as this week. So I don't mind looking at euro longs. One that I really like the look of is euro pounds. And I like the look of it last week because we had a really good seasonal play on this as well. And I was looking to try and get long on seasonals. And if we just take a look at euro pound though, it's just taken off. There is no way I've been able to capture any of that move. I will nearly went long here after this bullish candlestick because I saw the market had kind of rebounded at support, rallied, consolidated, was creating higher lows. Then we had a very strong close at the highs. I don't really like buying at the high though. So I was a little bit like, okay, well, if we break through, I'll have a little look at a sort of pullback opportunity just to confirm that we are starting to see some higher highs out of this. And it just hasn't looked back. Price has just completely rallied to the upside. So euro pound was on my list, but I don't think I'm going to get a decent entry into that now. What I will bring up though is the seasonal play that I was looking at on Markets Made Clear. And it was this seasonal play here on euro pound. And I was looking at the idea that you typically from the beginning of August to sort of mid-August, you get a bullish run on euro pound. So market, I'm looking for essentially as a decent rally. Now, the only problem with this is the correlation between this year and the past years has not been great. So, you know, although this pattern has a 70% win ratio with a sort of annualized performance of around 13%, didn't really see the idea of the market playing too much with the seasonals, but it was something I was watching because we like the look of pound shorts essentially last week, which have played out really nicely. So I like the idea of being pound short, and yeah, the market's just taken off. Not had a chance to kind of jump into that one, unfortunately. But yeah, let's go take a look at some more ideas. Ty's asked, is the Swiss correlated to gold? Let's have a look. So if I just go to majors, go to the, that's the New Zealand dollar, sorry, the Swiss franc. Usually at the bottom here, we get current market correlation. So CAD Swiss, obviously, is very strong at the moment with the Swiss franc futures market. 5-year US Treasury notes is, and the 10-year Euro Swisses as well, and the US Treasury bonds. So not seeing gold highlighted on here. There is a correlation tool that you can use and you can put in to see if the correlations are there. Let me see if I can find that for you. But there is a correlations in FX market. I think there was a tool I used before, which was this one. And this is on my FX book. So if you look at my FX book, and you can go down and try and find dollar Swiss wherever dollar Swiss is. Click on dollar Swiss. you got the top positive correlations, and you've got the top negative correlations later. But we're not seeing gold on there at the moment. Let me go back. Let me see if there's if we can do it with a specific tool. So gold, let's click on gold. Not seeing the correlation there on Swiss franc at the moment with gold. And again, this is why it's quite interesting to me in terms of, are we really in a recession? Because I think in a recessionary conditions, we would probably see some decent upside in the price of gold. If we take a look at kind of previous recessionary areas, obviously 2008, 2007 was a big one, and we had some decent upside in gold between 2007, 2008. Obviously, it was a pretty bad time actually for gold in 2008. 2015 maybe. Actually, we had downside, so maybe it is I thought that the market might move into safe havens, but we've actually had a little bit of downside in those kind of recessionary areas. So maybe this is a little bit of a sign as well, with a little bit of downside in gold. But I don't think the top's just here yet. In gold. But yeah, the correlation with the Swiss franc's not really there at the moment. Let's go back to the currency strength meter. So yeah, basically just highlighted these currency pairs that I want to have a little look at. Out of them, there was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 pairs that I thought we could take a look at going into this week. And then I've added a couple of others as well. So I like the look of dollar CAD shorts at the moment because we've spiked up into those highs, and we've got a commitment to trader report signal on this, which is basically showing us that the market is at an extreme level in terms of you want to be buying CAD, because we have a heavy amount of commercial buying in the markets. Okay, so I'm looking for the potential for the Canadian dollar to be bought up. Now, this is a CAD futures chart, so you just invert that for dollar CAD essentially. And I like the idea of looking for some upside to this market in particular. We can see that the long contracts increased to sort of extremes where we had a decent sort of rally out of dollar CAD in the past. So I like the idea, short plan dollar CAD in the past. So I like the idea of being short US dollar CAD based on the commitment of trader report data. So if I'm expecting sort of CAD strength to come into the market, I want to be looking at what's going on here on the currency strength and weakness table. And I can see that we are starting to see some CAD strength coming into the market. So happy to also be looking for CAD as well. And one of those ones that I have looked at last week and this week was pound CAD, because I like the idea of shorting the Great British Pound. We can see that we're negative on pound in the -1s now. So we had a -2 change on last week. But that pound has been weakening over a substantial period of time. If I go to the strength meter here, and we have a little look at that, the pound is the orange line, okay? And you can see that it started over the past few weeks to move lower, to trend lower, okay? So I'm looking for that opportunity of a pound that's weakening. The Australian dollar is pretty weak as well. So Aussie CAD potentially could be something to look out for in the near term for some opportunities as well. But if I go take a look at pound CAD, this is a market that I like the look of a couple of weeks ago for some short ideas. We are starting to see a bit of aggressive selling coming in here now, which is good. And basically what I've been looking for is those key changes of trend. We had this market sort of consolidating in and around this area, but I felt once we kind of breached this level, it was a good idea to start looking maybe at this downside pressure coming into the market. Now, I was short last week, but I closed for break even after NFP. This was the NFP candle. in here. Just wasn't doing the right actions, but I'm back in this now. Market rallied up into a key area of resistance, and we started to see selling coming back in again. So I like this market to the downside. We're coming into a little bit of support in here, but I think that we probably would breach and maybe go down towards the 174s is what I'm looking for. And that's basically built off of this weekly chart as well. Weekly area of resistance. Where is all the support? It's down in these areas here. That 174 is a big level of support that was used as support in the past. So I'm just looking to see, can we kind of get back to these points where we had this demand in the market? Around about that 174 handle is something I quite like the look of at the moment. Ty was short dollar CAD yesterday, but that crazy upside move stopped me out. Let's have a look at dollar CAD because I do like dollar CAD as well. Yesterday you're talking about that spike, that volatility spike. That would have knocked a lot of people out. I'm not short yet. I'm waiting. I was waiting for these lows to maybe break in here. Now we have got a close in at these lows, which is good. I feel like that's a good sign for further downside. So if we can break this, then I think that would open the door up for a move back to that 136 handle. This spike in here. That would have knocked a lot of people out, to be honest. 139 was our level. 139 was our level of interest. So that was, to me, if I saw that breach and close below, that was my sort of sign to say, okay, maybe we are going to start to see price move here. And if we look at the weekly chart, we're in this overall trading range. And the thing about this is, right, we've got a heavy resistance level. Okay, now price could still come up to the 1.4s because that was that kind of swing high in here that started in sort of September, October of 2023. The difference between here or the kind of previous times that we've been here is the commitment of trader reports, right? They're showing us that there is heavy commercial buying coming in for the Canadian dollar. And that does typically signal a potential top in the market. And that's what I'm looking for here. Can we look for a move down, perhaps to 136? If we breach 136, we could be back at the 132s. If we look at the sort of dollar point of that, the dollar has been a weaker currency of late. We look at dollar indexes trading at the 103s now. Breach that 104 as a support point. And the data out of the US has been really poor. Right, so the chance of a rate cut there is high. It's just whether they get the 50 basis points. I think that's where the market could be disappointed, is if we don't get the 50 basis points cut. For more content, will the dollar index ever go up? The last NFP sent euro dollar too high. Will it ever go up? Yeah, it will go up. It will go up, but it will go up on the idea that the Fed won't cut as aggressively. That's what I think. So at the moment, market's pricing in heavy cuts, 50 basis points, 75 basis points, really, if you count in actually, it might be more, it might be even 1% cuts by the end of the year. Let's have a quick flick over to that. Let's see if I'm on the right cards there or not. So if we go here, CME Fed Watch Tool, and we go to November. Let's see what they're pricing in for November. So November, they're pricing in a chance of 100% cut as well. So we'll be in that 450 to 475 area. So that's another. So they're expecting 50 basis points here, 25 basis points in November, and 25 basis points pretty much in December, right? So they're pricing in a hell of a lot of cuts at the moment, and that's why we're seeing that dollar weakness coming into the market. Because typically when a currency goes or a central bank cut interest rates, their currency devalues against currencies that have a central bank that is hiking, right? That's why we're seeing that dollar yen pressure as well, that dollar yen to the downside, because the market is now rushing to buy Japanese yen and sell gold essentially. So that's something to consider. But technically as well, it wasn't pretty. It wasn't pretty here, even from a technical point of view. You've got this very shallow rebound in at the support. Now, if I was buying US dollars, I'd want to see aggressive buying coming in from levels of demand, right? And we didn't get it. We didn't get that at all. The market was very shallow here. We talked about this in the week ahead analysis video a couple of weeks ago. There was not any serious buying coming in from the market. Now we've took a turn. We've come into support again, 102.50s. Are we seeing aggressive buying coming into the market now? Not really. If we look at the daily chart, you're not seeing very aggressive buying coming in. I think this would be a bit of profit taking, a bit of repositioning, a bit of, okay, let's stay calm a little bit and we'll reposition to see what happens shortly. But yeah, I think we might just go sideways this week because of the lack of data. From the lack of data. In relation to gold, I think based off of previous spikes, that when Iran launches attack, that gold will go to all-time highs, if only for a short time. Yeah, that's a very good point. Obviously, there's risk of war as well. Yeah, the situation between Iran and Israel is not great. So I think the chances of that happening seems quite high at the moment. So yeah, I think you're right. I think if we see the declaration of war, then yeah, we will probably see that be a catalyst for gold prices to move higher as well. Let me just quickly look around. So yeah, let's have a little flick over to some markets then that have been on the currency strength and weakness situation. It's the currency strength and weakness tool. Now, there's some things that I try and monitor on the currency strength and weakness as well. And I haven't been doing this religiously. This has only been happening for the past few weeks because it's not something that I've ever thought about doing. I've just kind of been using it to my own advantage and tracking my own personal trades. But I have been now starting the sort of FX performance sheet. And this is a very simple sheet. The reason why I'm doing and showing you this is because it's important to me. And I feel like this is something that really helped me. So I want to share it with you guys. So basically what I do here is when the currency strength meter gives me a selection of currency pairs to look at for the week ahead, the direction, I just monitor the open on the week and the close on the week and the amount of pips gained. Now, this just gives you a rough idea of if you had been involved with currency strength and weakness, how you would have performed that week. Very rough. Obviously, using strategies within that, the efficiency goes way higher, right? And I always talk about the approach of your why. Okay, why do you want to be involved with the market? And it can be as simple as currency strength and weakness, right? Something that I use all the time. Once you've got the why, you go to your conditions. And if you're familiar with the channel, I've talked about this over and over and over again. So sorry to kind of bore you again. And then once the conditions are done, you want to be going through your strategy. You know, what strategies will you use to take advantage of the conditions that have been met from the why? Okay. Now, that can be other ideas as well. Obviously, I've got an idea on commitment of trader reports at the moment, which is buying CAD. So I'm also kind of looking at that, looking at the conditions of those markets, and then looking at a strategy to implement. That's why I'm short pound CAD at the moment. So that's what I like to look at. So, and last week it had an absolute storming week, 939 pips would have been gained. Now, obviously, you can see the week prior 67, not that great. But if you consider that if you were looking to get short or get long on Euro CAD and Pound CAD, there you would have done better in terms of strategy. 106 here, 586. But last week was an absolute storm at 939 pips. And the only one that, and this is one that we actually spoke about last week in terms of not getting short on, was Kiwi dollar, because it was at that level of resistance. So we've got different currency pairs this time. Looking at euro dollar, dollar yen, dollar Swiss, Aussie yen, euro Oz, euro Kiwi, euro pound, New Zealand Swiss, New Zealand yen. So I'm just going to chuck that up there for a second so I can see those. And we're going to go through some of those currency pairs and see if they're actually tradable or not. Okay, and that's something that I like to do. I like to look at and see if they're tradable. Now, these markets have moved a long way now. We've seen the Swiss franc move aggressively to the downside. So looking at Aussie Swiss and Aussie yen, same. Aussie yen has moved aggressively lower. So when I come and look at the conditions, have the conditions been met? Okay, so we've got the currency strength and weakness giving us the Y. Have the conditions been met? Well, weekly is bearish, so I'd say yes. Daily chart is bearish, and what I would say is in a phase one, right? What I mean by phase one is if the market is in a downward trend, I call the sort of impulsive legs the phase one, okay? And then phase two is the retracement phase, okay? So you've got retracement and impulse. So what I look to do then is identify where we're at in that. So in my opinion, the market has moved down, pulled back, and is in the P1 stage. In that case, I can look for continuations to the downside on a strategy point of view. My only problem with this is how aggressive we have moved. And if I'm looking at a strategy, I'm like, where the hell can I get in? Right? I can look at a 50 MA strategy with a crossover of the stochastic oscillator. That can be one, you know, little double top there. That can be an entry signal here. But I also like to look at where's a really valid place to get involved with the market. And if I'm looking at the 4-hour time frame here, and if I just bring in volume and have a little look at where we've stuttered and whatnot, and where volume has been built, you know, I'm looking at something like that. Can I get a pullback into 96.54 before seeing the continuation? Nice 50 moving average there on the 4-hour time frame as well. So I'm looking more at those type of things right now. Looking to see if we get some kind of moves that are, you know, going to give us opportunities in line with that, essentially. I do like the idea of obviously trying to continue this momentum. I just don't know whether we've got the data at the moment to be able to produce that type of move in the markets. You know, we've moved a long way. Look at the stochastic is in that bearish territory. We've basically recovered a whole year's move within what? How many days is that? Within 25 days, so 17 trading days. So a whole year being done in a month, really, or 2 months. Yeah, not pretty, not pretty. So do I want to be selling this market? Yes, but do I want to be selling it here? No. That is the way I kind of look at it, right? So Aussie yen, same with Aussie Swiss, feel the same about that. Kind of feel the same with Kiwi Swiss and Kiwi yen as well. Although Kiwi yen did set up with an idea that I did like this morning. We had this sort of triangle pattern being formed and we broke out. But yeah, I'm very much in the same territory as this. I've been very aggressively short Kiwi Swiss for a while. So, you know, we hit that psychological level of 0.5 and the market's kind of closed there and bounced off. So would I expect a pullback? Yes. You know, where could we pull back to? Into these kind of levels, right? Do I want to short here, essentially? Okay. And if I do want to short here, where's my risk going to go, right? It's going to go above that high, essentially. So do I have, let's say, that 4-hour candle there? Do I have the risk to reward ratio to really get me, you know, get me going, get me, you know, to think that I like the idea of being short that? I don't think so. I don't think so right now. So I'm kind of waiting on those types of markets to kind of play out. Euro dollar. I've got on my list to potentially be a buyer, but we've come up into the 1.1s and we've rejected. So yeah, again, just kind of asking myself the question, where would I want to be long? Now I kind of don't mind this area here. If we think about it, this is an area where there is low volume. So this period here will be low volume. We obviously had an area of big volume just below that. So if we get rid of some of these lines, don't need this, don't need this. This could be a little bit of a turning point for euro dollar. Look, we've had a 30-minute double bottom potential form there, or even a 15-minute double bottom. The market's moved to the upside. So I'm not 100% against this little move up here. Because I do feel like the dollar's going to be a little bit weaker, but maybe I'll just wait for some confirmation on a higher time frame. You know, you got this hourly move. You know, when we're seeing markets like we're seeing this week, it's going to be very difficult trading conditions. So what I want to see is, do we actually breach some of these bearish conditions? And if we do, will that give me an opportunity to kind of trade higher at that point? Okay, so that's something I'm considering at the moment. So yeah, my thoughts are kind of turning more towards the cut reports and the committing to trader reports. So I'm currently short on pound CAD. So I like the idea of this continuing to the downside. Pound a weaker currency, CAD gaining strength. So I want to be a buyer of the Canadian dollar. So where am I going to go buy CAD against? I'm going to go buy it against currencies that are weak. Pound being one of those. Commodity currencies might bounce this week. That's all I'm thinking. So I want to be looking at currencies that could be getting a little bit weaker. So dollar CAD, obviously. Dollar CAD is another one that I like the look of as a potential short idea going into this trading week. So yeah, really speaking, those are the kind of assets that I'm looking at. Anything CAD based I'm looking at. You've got this kind of nice little break and retest of this zone. So yeah, I'm going to try and see if I can get on any kind of moves that involve the Canadian dollar going into this trading week. Vincent, what's your thoughts on pound Aussie? Not 100% against pound Aussie, to be honest, to the downside. Let's get rid of these in here. Let's go have a little look at our weekly chart. Yeah, don't mind this. You know, we came up into this resistance area up here, right? So nice big area of resistance. Australian dollar has obviously been very underwhelming recently, underperforming. So that's something to consider. The pound is bearish right now. We've got Bank of England cutting interest rates. They've talked about cutting interest rates further. Inflation's down in the UK. So, you know, mortgage rates are about to come down. The only thing I can think of is that we might get a little bit of sustained inflation if we do start to see everybody selling their houses because the mortgage rates have come down. It's a better buyer's market for the UK now in terms of getting mortgages at a lower interest rate. So people will want to sell and buy new houses. So it could inflate the property market a little bit. But other than that, you know, I like the idea of being a seller of this market. Australia has still got a higher inflation rate, 3.8%. And although the RBA are not necessarily wanting to cut interest rates right now, they are leaning more that way, but their interest rate's still high. So I don't think they'll hike anymore, unfortunately. There was a 75% probability they'd hike in the next meeting, and they didn't. I think that's largely down to the fact that China's been underperforming. So yeah, I like this, Vincent. I like it a lot. You got this nice little consolidation building up here. You know, I wouldn't short now because we're at lows. But you know, if price maybe did something like held here and then broke out, that would be nice. Or you know, if we get some kind of break and retest, I wouldn't mind that either. But I like pound Aussie a lot. Was it her Blueberry wants to open a prop firm? Just want to confirm if it's legit. Yeah, it's legit. It is legit. Sorry, I'm drinking out of this mega big cup because I got it for my birthday. So I'm getting a good use out of it. But yeah, it's called Blueberry Funded. It's a part of Blueberry. I don't know 100% the details, but I know that Blueberry Funded is coming very, very soon. Do you have a WhatsApp group that I can join either for steps? I do not. If you want things like that, then Blueberry have a Telegram channel. I don't know if the link's in the description or not, but if you do want to have a look at Blueberry's Telegram channel, there are insights that get pushed into there every single day that you can have a look at, and they are driven by the guys that work on the VIP trading room. So if that is something that you want to have a little look at, I can copy the link here and drop you into there, and that is the Blueberry Markets Telegram channel that you can go have a little look at. I personally don't do a WhatsApp group or anything like that. China has been bad for ours. Prices are still very high here, and the RBA governor is new. So even though it's not political, the last RBA governor was fired over interest rates. Yeah. It's an interesting dynamic. Obviously, there was a higher chance of a rate hike because of the inflation situation in Australia. Whether they now have seen what's happened in the US and thought, oh, this is not the way to do it, we might need to cut sooner. They might not want to go through an unemployment rate that goes too high. Essentially as well, the China data has been poor. And when China does poor, Australia tends to do poor as well because they're trading partners. So there is that element that if China is going through a sort of period of poor growth, there is a likely chance that Australia could be one to suffer because of that. Definitely. So the problem they have got obviously is inflation is higher, and that's why I don't think they will cut rates just yet. And I think that's where we could get a trading opportunity, right? That's where we could get a trading opportunity. If one central bank is going to be holding and the other is going to be cutting. So, pound Aussie makes a lot of sense to me. So Vincent called out pound Aussie. That makes a lot of sense. Definitely. I like that one. Do you take a trade if there's a 200 daily or weekly moving average in the way of your target? Yeah. I don't rely on them too much. I just kind of watch the price action, and then I'll follow it on a day-to-day. In Australia, when we say China or American sneezes, we catch cold. Yeah, I like that. I like that a lot. Right, guys, we've been going for about an hour or so now, so I tend to run it for an hour these days. So I'm gonna call it quits there. Thank you to everybody that joined and asked questions and commented and things like that. Sorry that I had a mouse malfunction halfway through the stream. Hopefully that doesn't happen again. I'll have to get one that is wired and just keep that going. So thank you very much. If you could leave the stream a thumbs up, that would be really appreciative. If you enjoyed the content here today, if you learned something new, if you just enjoyed the chat, then hit that thumbs up button. Lets me know that you like what we're providing here. And the important thing is to think outside the box and don't over leverage yourselves in these type of market conditions. Stay safe. When they do say risk management is key, it's because it is, right? Lose less when you do lose. Okay. So thank you very much, guys. Appreciate you taking your time to come and watch. Hope you have a great rest of your trading day. I'll be back at the same time on Thursday. So I will speak to you all then. Thank you, guys.